Morning friends, welcome to Ecoholics YouTube channel. Friends, my name is Avinash Agarwal and in this video I will be discussing with you important current affairs for 17th May 2024. In my discussion today I will be talking about three important topics. First topic is India's trade with China. In this topic we will be understanding why India's trade with China is increasing despite recent attempts by the government to decrease dependence upon China. Our imports from China are increasing. Our exports to China is increasing. Our trade deficit with China is at a very high level. Why is that happening? We will understand that. Secondly, we will talk about food inflation. In India, food inflation is rising for the last one and a half years continuously. It is at a very high level. We will understand why this is happening. And thirdly, we will talk about the steps that is being taken by the government of India to improve the accessibility of loans for MSMEs in India. So these are the three important topics that I am going to discuss in the next half an hour. Let us start our discussion. If you have any question, you can always ask in the comment section, right? And you can always discuss absolutely anything with me, whether it is regarding your exam, whether it is regarding this particular discussion, or any problem that you are facing in economics, right? You can reach out to Ecoholics. This note that I am using, we make it available through our app. You can download our app, do a very quick free registration, go to the study material section, go into current affairs and download the PDFs that I am using in this particular discussion, right? So let us start our discussion. So the first topic is India's increasing trade dependence vis-a-vis China. So there has been a significant expansion in India's trade with China, despite the fact that with the rest of the world our trade has contracted. So this is an anomaly, friends, that with the rest of the world our trade is contracting, and with one country where we want to, let's say, reduce dependence, etc., vis-a-vis that country our trade is expanding. China is India's largest trading partner, despite the fact that political relationships between India and China are not improving at all, right? If you see the data, and data is very important in any exam, in any interview, in any answer, if you are able to present relevant, credible data, you will always get brownie points from the examiner. So if you look at data, so India's imports from China grew by more than 3%, right? Despite the fact that the overall goods purchased from other countries fell by almost 6%. So there is a 6% decline in imports of goods from other countries as a totality, but vis-a-vis China there is a 3% rise, right? Similarly, India's exports to China, they climbed nearly 9%, despite the fact that total exports contracted by 3%. Our trade with China, or our import with China, has crossed $100 billion mark in 23-24. So in the last 2 years also we came very close to importing $100 billion worth of stuff from China. This time we have crossed the $100 billion mark, and our exports to China is around $20 billion. So there is a huge gap between, there is a huge deficit between India's trade with China, right? Now, which are the items where we need to be focusing our attention on? So electronics and machinery. So electronic integrated circuits, microassemblies, semiconductors, diodes, printed circuits, these are accounting for almost 45% of imports by value. Just these 4-5 items. And these are not just 4-5 items, they find a variety of applications because of the inherent utility of these items, because of the diverse nature of their applications, right? So you can see that this is an area where we need to focus more upon. So either we need to diversify away from China if that is possible, or we need to develop in-house capabilities within India, right? But if either of these two is not going to happen, then this is going to continue for a fairly long period of time. Apart from that, 50% or more of electric motors and generators, electric transformers, electric accumulators and their parts are imported from China. So now what you will see is that we have seen that 45% of our imports is coming from the above mentioned items, such as electronic integrated circuits, microassemblies, semiconductors, etc. Right? So you understand where the bulk of the import is coming from. Now what I will be discussing is that there are certain categories where we are importing more than 50% of that item from China. So while the numbers may be less, the value may be less, you can see the kind of dependence that we have for these items completely upon China, right? So electric motors, generators, transformers is falling in this category. Lithium ion batteries, 75% of lithium ion batteries that are imported in India are coming from China, right? When we talk about smartphone, thankfully government of India has launched a production linked incentive scheme, and because of that smartphone production has gone up significantly in India, and therefore decline therefore there is a decline in import of smartphones from China. So that's a very positive step, and that is something that we need to take some positive lessons out of. That if we can achieve that in, let us say, one area, then we can also try to replicate that in other areas. It's not impossible. If we try, we can definitely achieve it, right? There are a lot of small appliances, and you will see that 90% of these appliances are coming from China. Like for example, food grinders, food processors, mixers, juicers, vacuum cleaners, shavers, hair clippers, epilators. Major chunk of these items that are being imported from China. Same is the case with computers and laptops, right? When we talk about our exports, so we are exporting roughly around $20 billion worth of stuff to China. Petroleum products and marine products are our main exports. We are also exporting some amount of iron and steel, organic chemicals, residual chemicals, aluminium, and so on, right? So it has all been mentioned over here. Now, why is it that we are so trade dependent on China? This is a question that you need to be ready for. This is a question that will be asked in the examination. And the data has been presented. Now the reasoning has to be presented. Please note, friends, that in examination, two kinds of questions are asked. One is information based question, where if you have the right amount of information, the right information in the right manner, then you'll be able to tackle that question. And then there is a second more difficult kind of question, which requires you to have a particular information and then use that information to basically take an informed opinion or to take an informed stand, right? So whichever kind of question gets asked to you, the most important point that you should have is the right amount of information in the right direction, right? So now I have given you the right information vis-a-vis India's trade with China. Now let us understand analytically that why this is happening. So you have to realize that somewhere in the 90s, India started liberalizing foreign trade. We made it easier to import and export. And around that time, China was emerging as a competitive mega factory around the same time, right? So when we were relaxing our, trade policies, that was the time when China was emerging really strongly as a manufacturer. So what happened is that a lot of Indian companies, they were facing a lot of handicaps. They had small production capacities, high costs, limitations. They had not, developed any kind of economies of scale and economies of scope, right? So the moment the China option became available to them, right? So they felt that the best option is China option. We can directly import these items from China at a very, very low cost and create a market in India. So rather than take the headache of developing the entire supply chain in India from scratch, let us say, why don't we just import it from China and, there we go. So the idea being that import became very, very profitable into India from China. Okay. So these small appliance companies, etc., they definitely preferred cheap imports to domestic production. What happened is that global companies also shifted their production lines and supply chains into China. So we had greater faith, we had greater confidence upon China, and whether it is now intermediate goods, capital goods, consumer goods, all kinds of goods, if there is an import option available from China, and if there is even slight difficulty in producing that product in India from, let us say, a profitability point of view or from, let us say, a quality point of view, the easiest option is to import and be done with it. That is what is happening. Can we reduce this? Can we reduce the reliance on China? Very difficult. We are trying. We have tried Atmanirbhar Bharat Abhiyan. We have tried import restrictions on LCDs and LEDs. We have launched production-linked incentive schemes, right? We have done all of these things. We have become the second largest manufacturer of mobile phones. We have attained success in some areas, but China continues to dominate manufacturing, and it is giving a tough competition to a lot of Southeast Asian and other countries, including India. So India's dependence on Chinese goods is not going to disappear. It can definitely be tempered, but it will require a lot of strategic initiatives like the kind of ones that we have taken, at least for smartphones. So this is your informed opinion. This is your information. This is your conclusion vis-a-vis this article. If you're enjoying this article, if you're enjoying this discussion, please hit like. Please motivate us to make this kind of content more and more for you. Moving ahead, if there is any doubt, please ask. Otherwise, I will take my discussion ahead. So the idea being, now we are talking about farm interventions or interventions in the food supply chain. What is happening over there? Is the government getting it right? Right? So first I'll present the data to you. That data will thoroughly convince you that our food supply chain are not working well. Okay, and this is proper data. It's not anybody's opinion. What is that data? It is data related to food inflation. Now overall inflation in India has been more than 4%. The target that is there in front of RBI is to ensure that consumer price index combined, CPI combined, is 4% plus or minus 2%. Right? That is what the RBI's target is. But that doesn't mean that you can keep inflation, you can allow consumer price index combined to be close to 6% for 2 years. That is what is happening in India. That our consumer price index combined has been above 4% consistently for 2 years, right? So even if it is at 4.3%, the target is 4% plus or minus 2%. So there is a acceptability that okay, it can be 6%, it can be 2%, but it cannot always be around 5.5% mark, because the target is in 5% plus minus 2%. Target is 4% plus minus 2%, right? Now let's leave that aside. Let's talk about just food inflation, and the numbers are going to absolutely shock you, right? So food inflation has been more than 8% since November. That's more than 6 months now. Cereal inflation is at 8.63%. Rice inflation is at 12.5%, right? April is the 19th consecutive month of above 10% inflation. So it isn't something which has happened right now. This 19th consecutive month of, you having rice inflation more than 10%, right? Now look at what is happening in pulses. Inflation in pulses has been 8%, about 10% since June. So it's almost like now 10 months, 11 months that you are seeing pulses, this thing being above 10%, right? Look at fruits and vegetables. It's been more than 25% for the last 6 months. So there is a lot of stubbornness in food inflation, is what I have proven to you through this data point that has been provided by Himanshu in this article, right? Why is this happening despite the fact that international prices are easing? Why is this happening? What is the reason? Now let us exclude the often blamed reasons. Let us exclude those reasons. So we can blame supply, right? But domestic supplies have increased. If you look at the data that is coming out of Ministry of Agriculture, they are claiming bumper harvest, bumper crop, bumper harvest, bumper crop, right? So supply is not a very big problem. Apart from that, what can be the problem? Demand. But our economic recovery has been muted, right? Our rural real wages have been stagnant or declining, right? So there is no question that demand is so strong that it is outstripping the supply. If you look at how the core inflation is behaving, right? So core inflation is at 3%, and that clearly indicates that there is a demand deficit, right? I hope you understand what is core inflation. That from consumer price index combined ka basket, remove fruits, remove vegetables, and then whatever basket remains, that is basically the basket for core inflation. So the basket of goods put into core inflation, unka prices changes very, very gradually. Unka prices changes very, very slowly. So that it doesn't change. It doesn't change in a very volatile manner. That is what the idea of core inflation is. So core inflation at 3%. Whenever core inflation is increasing, let us say, so the demand situation is strong. Whenever core inflation is on the lower end, like it is at 3% right now, that indicates that the demand situation is not very strong, right? So supply is fine, demand is not so strong. We have had definitely unseasonal rain, heat waves, other climatic factors, but they don't seem to have taken a very bad toll upon supplies, etc. It doesn't merit food inflation to be so sticky and so high for a longish period of time. So what is the reason? What is the underlying reason? So the author says that the underlying reason could be the knee-jerk and ad hoc decisions that government of India is prone to taking when it comes to stock holding limits, when it comes to allowing exports and imports, when it comes to quantitative restrictions on trade and so on, right? So these knee-jerk and ad hoc reactions, they are taken so that we can instill a fear amongst traders. Let's say that you are a trader, I am the government. Suddenly I ask you to give me records on a weekly basis. Suddenly I impose a stock holding limit upon you. Suddenly I say that now this item is covered under Essential Commodities Act. You cannot, have holdings of this particular item more than a particular level. So what am I trying to do? I am trying to scare you. I am trying to tell you that, look boss, if you don't offload your holdings into the market, I am going to penalize you heavily. I may impose monetary penalty upon you. I may put you into jail, etc., etc. That is the kind of message that I'm sending out to you, right? That message is not working. This idea of excessive regulation is not working. Arbitrary export curbs, price control, domestic restrictions, application of ECA, it's not working. Time and time again, it has been done. So for wheat, exports were banned. Broken rice, exports were banned. Non-basmati exports, banned, right? Similarly, Essential Commodities Act was imposed upon wheat, right? Then it was imposed, then we asked the rice stockists to disclose their data every week. Then this was extended to pulses. Onion was subjected to price control, right? None of these actions is seeming to have any kind of right consequences or right outcomes on the ground. That is what the problem is, right? Most of these measures, they get applied without adequate scrutiny, without thought, without real research that will it really work, right? We don't have any ground assessment of crop availability, demand or supply that supports these kinds of actions. These are scare tactics, right? So that traders will be afraid. but nobody is afraid right now because everybody is gotten used to it, right? And what is now happening is that there is a lot of speculative trade that is happening. What is happening kind of speculative trade is happening, which is shooting the prices up, right? So these excessive use of control, hard tactics, they are not working, and we really need to, modernize our supply chains, regularize our supply chains, give some kind of certainty and credibility and predictability to the decisions that we are likely to take, so that people in the supply chain know what to expect, know what are the kind of margins that they have to build into, and so on and so forth. So these are the kind of suggestions that you have to make. So supply wasn't a problem, demand isn't the problem, and yet food prices are remaining high in India, double-digit inflation for 10 months, 15 months, 20 months in a variety of cases. This is what the discussion of this article is. And this article slightly deviates, in my opinion, in the second half, right? And it starts talking about remunerative farming, right? So they say that farmers should be able to benefit from price rise, farmers should be able to benefit from export opportunities, farmers should be protected from import surges, right? So these are the suggestions that you can make from a farmer income point of view. That's a separate topic. So the second half of this article is talking about that you should not, because the government of India's policy is always, or mostly it seems to be, favoring middle class consumers in urban areas. We try to keep food prices under control by hook or by crook by taking such kind of steps which can be detrimental for farmers. You suddenly don't allow them to export, right? You suddenly impose stock holding limits, so traders stop trading that item, they stop buying that item, so farmers don't have traders whom they can sell that item to, because the supply chain has now been broken by the government. So essentially the second half of the article says that, boss, put into place policies which are long-termish, which are prudent, which are protecting the incomes of farmers, which are giving them the right opportunities. That is what the second part of the article is discussing, but I'm not elaborating too much upon it because that's a part of a separate discussion in my opinion. So 2 articles are done. If there is any doubt, please ask. If you're enjoying this video, do like and share. Otherwise, I'll move ahead to the next article. Again, this is very important. Typically, in your examinations, you are also asked, short length questions, right? Maybe of 5 marks, depending upon which exam you are giving. And in those answers, you don't need to have a lot of opinion. You don't need to have, a lot of analysis. All you need is the good information that is required. So what I have decided from today onwards is that I will definitely try to bring small articles out of this newspaper, which are basically dealing with important topics, which are giving, let us say, 3-4 points worth of information, which can be used tactically if you're answering, let us say, a long answer question, which can be used also for answering a short answer question on this topic directly, right? So these kinds of articles I'll start covering from today onwards in my discussion with you guys. So MSME loans is a big problem, okay, and government is trying to solve this problem. So government is looking to strengthen the underwriting model for MSME loans, right? Because we want these guys to be able to take loans. See, if I'm an MSME, I don't have a lot of my savings, I don't have a lot of money sitting in the form of equity or anywhere, so I need to borrow to be able to purchase raw material, to be able to fulfill orders, to be able to modernize my facilities, and so on. Where is that money going to come from? Whom should I borrow from? So many a times banks don't want to lend to me. Why? Because I don't have last 3 years balance sheet, profit and loss and income statement. I don't have proofs. I don't have, any of these things, in very good ways. Or even if I have, it's not encouraging enough. So banks don't want to take the risk of lending to MSMEs many a times, right? So then MSMEs have to rely upon your traditional money lenders kind of folks who will charge, let us say, 1.5% rate of interest per month, which translates into 18% rate of interest per annum. These are problems, right? Because if your cost of capital goes up, if your access to capital goes down, then it's very difficult for you to scale. It's very difficult for you to do your business, right? If raw material prices double, you can go bankrupt, right? Because you do not have any coverage, you do not have any access to any capital. So access to capital is very important. You may be an entrepreneur, but you may have fantastic ideas. You may have a lot of energy and dynamism. But if you don't have capital, you will not be able to pull all other resources that are required to be able to establish and run your production unit. That is why capital is important, right? So the point is that underwriting is a process of evaluating risks to protect the interest of banks and other lenders. So typically insurance companies do a lot of underwriting, right? They underwrite the risks, right? So when you buy an insurance policy, so what has happened is that the insurance company has underwritten the probability of you encountering that risk and you encountering that loss in reality, right? So they have charged a premium to cover that risk. You may not face that risk. The insurance company will, let us say, keep that premium. If you face that risk, right, then the insurance company will pay you a payout, right? So if an insurance company, let us say, has underwritten 100 people, not everybody is expected to encounter that risk and therefore ask for a payout. Even if 5 people, 7 people, 10 people encounter that risk and ask for a payout, that is still fine. In totality, the insurance company will still be in a profit, right? So the idea over here being that similarly, when banks are lending to MSMEs, they need to assess the underlying, they need to assess the risk, and they need to price their loans accordingly, and they need to lend out to a universe of MSMEs. Some of them may be defaulting, but others will not default, and that is a process that we need to do scientifically, technically, commercially in the right direction, right? So the idea being that, of course, we want to lower defaults by MSMEs, we want to increase financing for these small businesses, right? So a subgroup has been created for strengthening the underwriting model, right, and expanding of digital public infrastructure for MSMEs and self-help groups. So these are the kinds of points that should get reflected in your answers on MSME loans or MSME financing if asked directly. These are the kind of points that should make an appearance in your answer for MSMEs in general, that what are the kind of steps that are taken. So from a financing point of view, strengthening of underwriting, right, digital public infrastructure usage, these are the kind of points that you have to make, right? We want to enhance responsible lending for MSMEs, right? So a subgroup has been created, right? If you're lending to smaller businesses, there is no collateral, right? So how do the risk gets assessed and covered? Because if there is no collateral, bank has no guarantee that they will be able to recover the money. What is collateral? I have borrowed money from you, but you have not just given money to me like that. You have kept my housing papers, or you have kept my land papers, or you have kept my gold, or you have kept my vehicle papers. You have kept something with you, right? Which basically means that tomorrow if I run away, you will liquidate my assets and you will probably try to recover your money, right? Now for smaller loans, collateral etc. is not available. For smaller borrowers, collateral etc. is not available because you don't own collateral. So what will they give to you, right? So therefore your risk is higher, your vulnerability is higher, right? Micro enterprises, they are largely in the unorganized sectors, right? They lack collateral, they lack documentation, right? So this subgroup will look into ways of how you can strengthen the underwriting for the unorganized sector, right? Banks and NBFCs, they have traditionally not been very enthusiastic of financing MSMEs, but obviously the government wants commercial banks to lend to small businesses, right? And NBFCs to lend to small businesses, right? And since the government is pushing, so banks are doing. So that is good, but we need to make this entire model, we need to make this entire pipeline, more robust. That is what we need to do, right? So sovereign guarantees were provided by the government, like for example, Emergency Credit Line Guarantee Scheme, ECLGS. So during COVID pandemic, MSMEs were not getting loans, very difficult. So the government launched this ECLGS that you give loans. If you face a loss as a bank, we will cover your losses, right? A credit guarantee fund was created to ensure funds for small businesses for loans up to 1 crore, right? Now, the government is looking at creating a new credit guarantee for the scheme, right? And to standardize the process across different schemes. So what we did during COVID, can it be given a more permanent scope? Can it be given a more permanent structure until these MSMEs become stronger, etc., and become credible borrowers in their own light? So that is something that we need to think about, right? So for the unorganized sector, right, there is no way to get loans from financial institutions other than Mudra scheme, right? So we need to look at ways, how do we help small businesses in the informal space? So you can always, highlight Mudra scheme as a step that was taken in the right direction, but we need more than Mudra scheme. What is Mudra scheme? It is Pradhan Mantri Mudra Yojana, which was launched in 2015. It is giving you collateral-free loans up to 10 lakhs to non-corporates, non-farm, small and micro enterprises, right? Now these loans typically get given by commercial banks, RRBs, small finance banks, and so on, right? And if you see the bank credit for micro and small businesses, it was around 6.33 trillion, meaning lakh crore, right? 6.33 trillion, right? And that for medium enterprise, it was 2.68 trillion, right? So there are signs of rising delinquencies, right? Especially in credit card, unsecured and MSME loans. So if this is going to be a problem, then banks are not going to be willing to lend. Banks are going to be further more averse to lending to this particular sector. And this is where a lot of work needs to be done. So the work has not been done. but you have been made aware. And typically what happens is that they ask you questions from these white spaces which are yet unresolved, which are yet a very big challenge, and they ask for what your opinion is, what your thought process is, what do you think should be done, etc., etc. So reading these kinds of articles, in my opinion, will be very helpful. So sometimes you'll get a lot of points from these articles and this discussion. Sometimes you'll get a few points and a lot of understanding out of these articles and this discussion. So this is my submission to you today. I hope you enjoyed the discussion. As you all can see, I am consciously trying to keep the length of this session within 30 minutes so that your investment of time remains, confined to these 30 minutes. I understand everybody is hard constrained for time. So I hope that you have enjoyed this discussion. If there is anything that you would like to ask or say, please go ahead and do that. Otherwise, I'll bring this session to an end. So we'll meet tomorrow again. Thank you so much, guys. See you tomorrow. Until then, take care. Goodbye and Jai Hind to all of you guys. Thank you so much.